Hi, everyone. This is Jackie Cooper with Crypto Mom 2, and I want to welcome everyone back to the talk show and also wish everyone a happy new year. This is actually the first recording in the new year that will probably post within the week. And I am super excited to be starting this new year with my special guest. Before I hop over to my guest today, I just want to share with everyone, especially if you're new to Crypto Mom 2, and if you're looking at my Zoom backdrop, you'll see that I have listed now all my various talk shows. Definitely like and subscribe. And there's a newsletter too that you can also subscribe to on both Medium as well as in LinkedIn. It's called the Happiness Factor News. And my focus this year in Crypto Mom 2 is to bring more experts to the talk show that can kind of share educationally things that are going on in law, blockchain, Bitcoin, altcoins, and other fintech. But as with everything else, there are disclaimers. So the information that you hear on this show is not legal advice. It's not financial advice. There's a lot of volatility within the blockchain space, crypto space. And so you need to do any investments with adequate research, and you should always double verify the information that you get and check with your own personal professional advisors. So with that being said, I also just want to share one more quick thing, my background. My background is law, but I'm also an educator. And so I feel it's really important that as we start this new year in the blockchain space, that we reach out and we mentor to more. So that way everyone can learn about this exciting space, but also learn how to stay safe, because we've all seen the highs and lows last year in 2022. But I think that there's a lot of wonderful things going on within the blockchain space. And so that's why I brought on my guest today. So Joseph, how are you doing today?
I'm doing great, Jackie. Thanks for having me on.
Yeah, no, we connected last year, and we have a lot of similar interests. Why don't you go ahead and share a little bit about your background? I know you've been in this space a lot longer than I have, and you have a really special, interesting story. So why don't you go ahead and share so the listeners can understand why I wanted you to on?
Sure. Yeah, I'll start at the beginning, I guess. So my background is in finance and engineering technology. My first business in 2015 was the marketplace platform business. So this is Zillow, Amazon, Google, that business model. I applied that business model to college tours. That was my first business. And that's where I learned all about that marketplace business model, and I think blockchain is actually just the next evolution of that business model at the technology level. And that's why I got into the space. But out of college, I worked at Vanguard in derivatives finance for a couple of years up until 2017, when the price of Bitcoin started going up. And I started doing more research. And I essentially stopped doing my job and started just reading about crypto all day until I got to a breaking point, and my boss realized that I wasn't doing any work. And I basically said that, we need to settle all of our trades on a blockchain, and we need to launch a crypto trading desk for our clients, which didn't make any sense in 2017. But so that's why I left. I joined a crypto startup called ICOalert.com in 2017 as a second employee, which was essentially coin market cap for ICOs, and helped scale that company to 30 plus people over the course of the first bull run. And then we lost all of our business essentially overnight when the market crashed. So then I moved on to Hewlett Packard Enterprise in big tech, marketplace technology strategy, and enterprise blockchain product management strategy for a couple of years. Up until about 18 months ago, when I left to start building businesses in Web3. And that's kind of like how I got to this point.
I love it. I love it. So why don't you share a little bit about your current project and how you decided to get started in that. And then we'll dive deeper into the things that you're doing with that.
Sure. So the first business that I started over 18 months ago was through kind of my personal network, popular demand, was a crypto hedge fund. It's really diversified exposure to every liquid crypto besides Bitcoin, because we don't believe you should pay fees on a Bitcoin position. It's not that type of asset. So we are really 25 to 30 positions in the crypto space. We're mostly focused on things that are kind of outside the top of 100, which is not usually what you see from more institutional focused hedge funds in the space. So that's kind of our niche, is more emerging tech in the space, more fundamental research focus. So that's the liquid side of the business. And more recently, I've been spending a lot of time and energy on the venture side of the business. So investing in earlier stage Web3 companies.
So you talk about hedge funds. Are there a lot of hedge funds out there that are within the crypto space, or that are integrating crypto within their portfolio? And what made you decide, to kind of use the hedge fund model to develop?
So I think the first thing there is around what you see from traditional kind of hedge funds in the space, and what does that market look like? And the market looks like what you get is a lot of ex Goldman Sachs, Morgan Stanley, these types of traders, more institutional finance focused, that now want to apply their skill set to crypto. So what that is essentially is they run a trading strategy on the top 50 crypto assets, and that's your exposure, right? But in our opinion, that's really not the right way to get exposure to the asset class if you believe in the technology in the long run. So what we're doing is we're applying more of a venture capital mindset to liquid token investing, and that's why a hedge fund makes more sense, because all the assets are liquid. So we're taking more of a 2 to 5 year time horizon, and systematically taking profits to kind of capture that upside before these assets are listed on, say, Coinbase, for example.
How do you find the assets or the projects that you think you might want to include within the hedge fund or invest in?
Well, that's a good question, and it kind of circles back to the reason why I'm focusing more on the venture side. So just by nature of being an early stage liquid token crypto investor, I started to get access to some of these more venture deals in the pre-seed and seed rate rounds of these companies. But in terms of how to find them, it's tough to say, but really founders introduce you to other founders, which is helpful, kind of that referral effect. But I would say the majority is that it's pretty random, and the crypto rabbit hole is very real, and a lot of things come, if you dig deep enough, come out of that way. So I haven't really found a rhyme or reason.
That's okay. That's okay. So I know you and I were talking off camera about Wyoming and the location of your project within Wyoming. Can you maybe share for everyone why you decided to? That's one of the things actually for everyone who's listening that I'm going to be doing this year. I'm circling back to my law side, and I'm going to try to do a general overview as to what each state is doing in the crypto and blockchain space, because I think it's fascinating. Wyoming is very progressive. So why did you choose Wyoming instead of another state?
Yeah, that's it's actually kind of the founding story of how I got started in crypto too, because Caitlin Long, who was an ex JP Morgan banker, who's now the CEO of Custodia Bank in Wyoming. She was giving a speech at Vanguard in my last week or two, and that's kind of what pushed me over the edge to actually go into crypto full time in 2017. But the reasons why Wyoming is it's threefold. So The first is securities law. So Wyoming has the most flexible state regulatory framework for what is and isn't a security in this space. So that's kind of the first thing. Very vague, but the first reason. The second is property rights. So Wyoming is the only state that will hold up digital assets as property in court if there's any sort of lawsuit or anything like that. So it's the only state that does that. So that's number two. The third and the most important is the special purpose depository institutions. So this is just a new banking charter that Caitlin Long actually pushed through been working on it for years now. And what this says is that these crypto banks are required to hold 100% of their assets in reserve at the bank. And then you can, have access to different trading accounts, but the assets stay in cold storage at the bank. So it kind of flips that the banking model that we're used to, fractional reserve banking, where banks lend out your money to make additional interest. So it flips that model on its head, and it's actually what you need to enable institutional quality asset management in the space. So Wyoming is certainly ahead of its time.
I love what you just shared. And I recently just started to follow her. So, I think I did that right after you shared more information from our chat last year with me. But I keep thinking that, well, there are many things that happen with FTX, but if FTX had that type of liquid capital reserve, then it's possible that the situation that ended up happening might not have happened, because my understanding is he was moving the funds from one part to the other, so it was sort of like a domino effect. What are your thoughts about that? Do you think that the FTX situation might have been prevented if that same model had existed?
Yeah, it's possible, but the problem isn't the problem is that the model is not widely adopted yet.
Yeah.
And it's for some reasons, right? People don't want to give up control.
Yeah.
And they also, it's really not about it's really not a failure of the technology. It's really a failure in human and corporate governance, really. So it's really human greed is what human greed and capitalism is not that capitalism is bad, but was really the issue at hand in
Yeah.
terms of
Yeah.
corporate governance, not really the technology. The technology worked as intended.
Yeah, no, I agree with you totally. The technology, there's so much that we are and can be doing with it, but it's always the human element there. And like you said, the greed side of it that kind of is the challenge that we face. So if someone wanted to learn more about what you're doing, or learn more about, hedge funds or other projects that you're working on, how would they do that?
Sure. So you can definitely follow me on Twitter at Joseph Argiro or at Iron Key Capital. Those are we put out some thoughtful research, and you can kind of stay up to date that way. Also, ironkeycapital.com. If you're thinking about doing some deep dive into the different sectors in crypto and the technology, we put out some pretty deep, thoughtful research and different videos on kind of sharing the tip of the iceberg of our research. So definitely check out our research page there. And
for everyone who's listening, you might be driving, you might not have a pen or paper. Don't worry, just come on back to this episode, and that way you'll be able to see the links, and that way you can reach out and learn more about the project. There's a lot going on in this space. What comes to mind that you might want to share that people need to be aware of, both maybe from an investing side, or the evolving nature of the application of blockchain, whether it's the DAOs or other things like that? What is close to your heart, and what are you focusing on in this next year?
Yeah, so twofold. I would say one is the regulation. the impending regulation that's coming down from the SEC. So eight out of the nine regulatory bodies in the U.S. have kind of given some sense of clear guidance of how they're treating digital assets, whereas the SEC hasn't yet. And we expect that to happen this year for sure. So that has the potential to create almost a cascading effect, or really ripple the entire digital asset ecosystem in terms of, being on essentially the right side of history, and you really have one chance to do that. So that's where a lot of our focus has been from a research perspective on, what is going to get adopted here by enterprises, big tech, and governments, and what's compliant and what's going to, essentially fall by the wayside as clear regulation comes to the scene. So that's regulation. I would say the second is really around equity and token value accrual structure. So in what scenarios does the equity accrue value or the token, right? And depending on the company's business model, it could be either or both, but we really haven't seen many scenarios of where value accrues to both the equity and the token. So that's another definitely key point of our research. But another, just to follow up on that, in terms of the venture capital landscape in crypto, is it's shifted over, especially because of this bear market. In that, in 2017, 2018, you had the ICO craze where people were itching to buy a token that's not backed by anything, right? And now the market has shifted, especially with the bear market, that you're actually better off as an investor investing in equity before the company finds product market fit. And then these companies have plans for a token that they're going to launch in the future. But a lot of companies now are not starting with a token. And we see that as kind of a better way to hedge your risks as an investor. So that's certainly something to watch evolve this year.
I like what you've shared about both the regulation side as well as token development side. Again, I know last year the SEC was definitely, they had their hands on a lot of different things, and sometimes the messages were clear and sometimes there were mixed messages. And the challenge is you have the federal side and then you have the states. So the guidance, needs to kind of be integrated, and that's the challenge, because otherwise individuals, I'm thinking about, for me personally, there were different companies that I was looking at that the state side said one thing and then the federal side said another. So again, I'm hoping that we'll get some positive support for consumers, but also positive support for the blockchain industry, because again, we need to support those that are not knowledgeable, who are the consumers, but we also need to support the creativity that's in the blockchain world, and not hold the hands so much that we can't develop more. And I also, appreciate what you're saying about the token side too, because, when we sometimes forget that it's not just token, altcoin, Bitcoin currency. There's a whole nother layer of value that's being created for the companies. And as you were saying, there's the equity side. There's looking at it as a potential of future growth. And that can be, there's many layers to this. So I do, recommend or suggest to everyone, Joseph has mentioned that at his website that they've done some research and videos. So definitely this is why I want everyone to kind of hop on, look around, use different viewpoints, different people who are doing this research, because all of this takes time. And just like you mentioned, when you first, started, it's going down a rabbit hole, and you keep reading, you keep, talking to different people, and all that takes time. So you've actually developed, a really strong knowledge base, and now you're sharing that back. So are you heading to any conferences this year that we should be aware of?
Yes, I'm actually headed to Miami on March 2nd at the NFT Expoverse. conference. So I'm speaking there, and also at the Emerging Hedge Fund Conference in New York on February 15th.
Awesome.
But I'm excited to
Yeah.
get down to Miami.
Yeah, no. So I was at the Expoverse in July, and it's a great event. So for those that are listening, if you are at any of these conferences, definitely, reach out and find Joseph, and definitely attend, the places that he's speaking. But these conferences throughout the year, there's a lot of diverse conferences, and it's important to kind of see what resonates with you. And that's another way that you can also talk to people who are doing different things in the industry. So do you want to mention again how people can reach you? I will have that information in the blog, but this way people can write it down if they have a paper and pen.
Sure. So the best way to reach my team is at ironkeycapital.com. You can check out all of our different resources. Twitter is great, at Joseph Argiro. And we'll send some links there. But as far as the venture side goes, I'm looking to bring on different venture scouts, analysts, researchers who are in the crypto space and maybe want to take it more seriously or move into a more part-time, full-time role. So definitely looking for smart crypto analysts. And if you're an investor, definitely would love to chat. We offer the hedge fund, which is liquid token exposure, and the venture side, which is no fees. Investor maintains decision control over their capital, and we just share the deals that we're investing in, and investors can essentially come in at the same valuation that we are. So pooling capital together from angel investors on the venture side. So those are the ways you can get involved.
That's awesome. That's awesome. Everyone who's listening, definitely like and subscribe. Definitely, follow Joseph on LinkedIn and other places on Twitter as well. And as I always say to everyone, be kind to yourself, be kind to others, and we're all part of one world, and we're also interconnected. So have a great day, and we'll chat soon. Thank you so much.
Thanks, Jackie.